Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. The charts have once again given us signals that were 100% accurate. And if you were following along last week with our market report, you will have known that the sellers were moving in as of the close last Friday, and they continued to pound prices lower without letting up whatsoever. As you may have seen, stocks closed out the week with the worst start to the year ever in the history of the stock market. We were down over 1,000 points actually in the first 4 days of the week. Today was just another pounding as news of the sagging Chinese economy acted like a domino effect going around the world. And the charts gave us those signals long before the sell-off. Let's review. Last week, I drew my line. I said we would most likely move down to the bottom of this channel line, and I said if we were to break down below that channel line, we would most likely come down to fill this gap right here. That's what that horizontal line represents, was a gap support level and a gap target. So we hit that. Now, if you look at the volume down here, the volume from January 8th is a lower volume bar than that of January 7th. So we're seeing a slowdown in the volume as prices are going down, and that tells us that maybe the sellers are lightening up on their pressure and we may just see a bounce. So what I'm going to do is I'm going to erase this line that I drew, which was my forecast line. I'm going to erase this channel line, and I'm going to forecast that we'll most likely see a bounce next week as we move up towards this gap, which is a gap fill target. Whether or not we'll go all the way back to fill that gap, I don't know, but I do think that we will see a little bit of a bounce to give a break to the investors who are sweating it out. But I want you to know the tide has turned. This is not a bull market any longer. We're seeing lower highs, we're seeing lower lows, we're seeing volumes accelerating on the down move, and I'm telling you, if you're thinking about buying any new long positions, you're putting yourself in harm's way, financially that is. Now, if you look at the Russell 2000, which is a more broad-based index, you'll see the lines that I drew from last week. I said that we would most likely pull back to test this support level. We did, actually, for one day, tested that, tried to bounce. It failed to bounce and then broke down. So the Russell 2000 is now in a free fall. If I back up just a little bit on the weekly chart for the Russell 2000, you'll see that we are approaching a support level right here. That's good news for those who are looking to stop the bleeding. This low from the week back in October of 2014 held. We bounced nicely. We're now down to that level, so I am expecting a bounce for the Russell 2000, at least a slight bounce. Some might even call it a dead cat bounce, but I am expecting a bounce, so I'm going to leave that in place as well. That doesn't mean sell the house, sell the farm, and go get long stocks. It just means that if we come down to this support, we could see a bounce. But if we break down below that support, all bets are off, because this is a topping pattern called a head and shoulders pattern. That's a significant signal of a market top. And we at the Market Guys are putting out to our subscribers more bear strategies than bull strategies. So pay close attention to that. If you look at the spiders, SPY, that's the S&P 500 ETF. I'll go back to the daily chart there so you can see how we came down to fill this gap. Again, that was my forecast from last week. Here's the line that I drew. I would encourage you to go back and look at that video so you can see the accuracy of our reports and how well the technical signals are being followed. I said we would go down to retest this channel line, and if it were to break down below that channel line, I said we would go down and fill the gap. That's exactly what we've seen. Now what I'm going to do is erase all lines for the spiders. I'm going to clear the board, and I'm going to draw another horizontal line, which is a support level. I do think that we will see a little bit of a bounce as we start to make a recovery from this massive selling. And the only reason I think we could see a little bit of a bounce is because the volume is slightly lower this Friday than it was on Thursday. Again, signaling that the sellers might be slowing down their selling activity, and this gap target is filled. So chances are we could see a little bit of a reversal. Looking at the Qs, QQQ, also known as the power shares, representing the tech sector, mainly the NASDAQ. Again, with great accuracy, I was able to forecast the market last week. I said we would come down to this level, which we did. We broke down below support. There's a minor gap right here. Again, the NASDAQ is a little bit different position than the rest of the markets because we see volume increasing here, which tells us the sellers are still motivated for the tech sector. So we're going to draw a support level right here, right around the 100 level. I'm going to erase this line. I'm going to erase this line, and I'm going to draw something that might look a little strange, but I'm going to draw the pivot point. I think we could come down a little bit, and then I think we're going to go back up in a slight bounce. Again, not a massive rally that's going to put us in another bull market. This is a very defensive market that we're in right now. If you have any long positions, you should be protecting them with stop losses or options, or at least getting out and moving to cash. Now, finally, if we look at the VIX, this is a volatility index. I put out a forecast last week that I thought the VIX would rally, and that's exactly what it did. I said it would pull back a little bit. It did, and then rallied right from there. We are now at a resistance point right here. The VIX is a contrarian indicator to the S&P. So what I think could happen is that we will move up a little bit to test that resistance point. Again, I'm going to draw that pivot point, and then I think we're going to go down, and then we'll have to monitor the VIX to see what happens. Remember, if the VIX goes up, the market could go down. If the VIX goes down, the market will most likely move up. That's my forecast on the VIX. The Market Guys has a Facebook page that you can subscribe to. I do put out periodic notification with regard to market news that's relevant to our positions. For our subscribers, you can go to themarketguys.com and you can sign up to our services. Just go to www.themarketguys.com and you can click on the reports page. You can click on video page. There's lots of information there. And we offer a trade alert service. It's right there, the options oracle and the equity oracle. If you want to learn how to trade like a pro, my goal is to teach you first how to read the charts and forecast the markets. I'm good at doing that. All you have to do is be a good student, and you too can get great percentages based on what you're seeing on the charts. So I encourage you to join us at the Market Guys, and I want to thank you for listening. Have a great weekend. So long.